Okay, we have a question coming through regards to euro dollar. This is following the ADP report. So the data's come out, and we're now looking at the reaction in the market. Euro dollar and sterling. So we can see that the euro dollar is an uptrend. We'll switch over to GBP over here, and we'll look at these at the same time. They'll be virtually the same charts. So euro dollar is in an uptrend, breakout continuation, low hanging fruit, trend trade, 2-star quality. The bullishness in the euro is being born out of a first bullish month last month. Therefore, we anticipate the bullishness to continue this month. We'll look at that in the chart in a moment. We're currently inside of last month's range. The previous month faked out low, therefore it moved back inside of the previous month's low, which is bullish. So we got a very bullish chart on the monthly chart with the euro. We've also got 3 weeks, 3 months short. So that's a very bullish month. That's crying out for a continuation to the upside. We've got a weekly fake out low to accompany that, and we're breaking out to the upside on the daily chart. So we'll look at that in a moment. The pound, we can see, is slightly less bullish. Yes, we've broken out on the day to the upside, but we're breaking up into a bearish situation on the weekly chart. I'm going to get into the dollar, into cable first of all, because that's an interesting scenario, and euro is giving us the higher probability trade setup. So looking at cable, we've got this situation. Yes, we are breaking up out of yesterday's highs, but look what we're doing. We're coming straight into last week's highs, and that's giving resistance. Okay, that's what the indicator is picking up on. So therefore, we've got no trade, because what we've got are bears meeting the breakout bulls. So there is no possible way to trade that unless you want to gamble. All right, so there's no setup. You don't get involved in that rubbish. All right. So what we'll do is we'll just move aside. I mean, what we can do is we could say, all right, well, fine. If the price comes back below yesterday's highs, then we've got something brewing. All right. Then we can get involved in what will be a pullback. Okay. A counter trend trade opportunity below yesterday's highs. So you can even go as far and sticking a alarm on that. If we get below yesterday's highs, then we've got a setup. Why? Because we'll have the weekly and daily chart aligned. The 4-hour chart will be aligned. And if we get below those highs from yesterday, we'll get below the Asian highs. So we'll also have the 8-hour chart. That will be a beautiful setup, because we'll have 3 sessions long, 3L, for the reversal trade setup. So at the moment, nothing to do, but we can put an alarm on that for a trade setup to go short. Right, okay, so we've got a 15-minute. If that line gets touched on the 15-minute chart, we get alerted. We start rolling up our sleeves for a fake out high through that Asian low, through that Asian high. So the pump and dump, testing the Asian highs for a continuation to the downside. With the euro, we have a more bullish scenario in that we are above yesterday's highs, and there's plenty of room up into the previous previous month and previous week's highs. So as you can see, at the start of this week, we dropped below last week's lows, and then we pumped up. So that's a bullish situation. We pumped up into last week's range. We've come up, taken out yesterday's highs on the day. Everything's still very bullish. No signs of a reversal other than we've got a fake out high here on the 4-hour chart, but let's just stick with the bullish program for now. Back inside of last week's lows, above the closing price of last month. Everything all very bullish. Pausing while my brain ticks over. The only scenario here is that we've got 3L on the 8-hour. That's each session is around about 8 hours. So counting back, we've got breaking out of Asia, New York breaking out of London. So we've got 3 sessions of rise here, which is a bit toppy. Looking left, what's the resistance? Well, I don't really see any until we get into last Thursday's highs. Sorry, last Thursday's value area high. It's a naked value area high that gives room up into that level, testing through the stops above Friday's highs. Now, zooming in on the day itself, this is the closing price, space between the London open lows and that closing price, if this market were to reverse. We've got yesterday's highs, potential support. The value area high taken out. We're in breakout of the value area. Auctioning up, we got a fake out low to pump higher. Taking out the initial London 4-hour high, potentially. At the moment, we're below it, but we're coming up to retest it. There you go. The indicator picks up on that. So we're back in breakout of that initial London open high. Fake out low could send that higher into that potential resistance to retest the highs of the day. So far, that is the high of the day. Will this be a weak high and a strong low, double bottom low? Potentially. For the continuation. Okay. We've got ECB Lane speaking. We've got Fed Barkin speaking. 45 minutes or half an hour's time. We've got the PMIs, S&P PMIs, and then we've got ISM at 10 a.m. New York. So I would be inclined to wait for the data, 10 a.m. New York, and see how the market is set up. Once the data comes out, wait for the dust to settle, see if there's a setup, depending on the trend predator, what it's signaling, and then your entry rules to either continue with the trend trade, or what we might find is by 10 a.m. we'll have a new 8-hour session. We'll be 1 hour into the New York official 8-hour session. We might have a scenario where we break up, pull back inside of the 8-hour box, which is this here being formed at the moment, up until 9 a.m., which is already done. Okay, so if we come down to a lower time frame, we'll see that we're now on the other side of that box. Okay, all of this here now is the New York session. So if we pump up, meet resistance, come back inside of the London session, then that would be a bearish scenario for a potential scalp into that closing price. But let's wait and see how the data comes out. So sitting on hands, being patient, let the market do what it wants to do until the data, and then even then, let the market show you what it wants to do. If it wants to continue, it will have to stay outside of that London box. If it wants to reverse, it will have to come inside of that London box highs. So let's just put those there now. If we get back below those London highs, having pumped out and reverse back into it, that would be a bearish setup to come short into the closing price at least for a retest of yesterday's highs. Otherwise, we continue with the upside trajectory and potentially have a setup, depending on the price action, around those London highs and the high of the day for the continuation trade, a bullish setup to go long with the trend trade. Okay, so I hope that was informative. If you want any further education around this indicator, there'll be plenty of information in the description of this video. By all means, just reach out to me.